Active Investor here, bringing you another independent analysis. This time we're taking another look at ticker symbol GEVO, Gevo. Company name, Gevo Incorporated. Imagine that. And the chart we're looking at here today is a 15-minute chart. Each candlestick on this chart representing 15 minutes of trading. You can see Gevo had a falling off. It looks like the earnings were disappointing. Falling off all the way from about 75 to 78 cents, all the way down to about 55, the low, 48 cents. And then we came back up, found some support, and Gevo is not looking too bad now. Let's take a look. Right off the bat, there is some obvious higher lows. First off, I'm talking about this 15-minute candle there, the 15-minute candle here, the 15-minute candle here, and then this whole area of consolidation today. So, very nice higher lows there. Of course, we had a lower low on the original selling off and some more pullback here. But overall, the recovery has been pretty quick. You can see this area was mostly the latter part of the trading period from, what is that, Tuesday, I believe? And then, or actually, yeah, Tuesday, that's right. And then, let's see, then some after hours and pre-market action. So actually, this thing has made a pretty nice recovery. The one thing I will say, though, is it looks like it just couldn't quite beat the resistance here at 60 cents. So, speaking of 60 cents, let's take a look at our pivot points. That top one, we have 63 cents. Moving on down, we have 60 cents. And then we have that soft support there at 55 cents flat. And then at the very bottom, we have two more areas of support. Those are going to be our pivot points of 50.8 and 49. Kind of running out of room. 49 and 50. Oh, that's a bad 5. Let's redo that. 58. Almost 51. So 63 cents, 60 cents, 55 cents, 58, and 49 cents. Now you notice we have two more averages than usual here on the chart. That's because it's important to look at the 200 and 100-day moving averages for Gevo here. They tell us a pretty good story. So right away, you'll notice that as we had that selling off and the price shot down, we crossed below that 100 and 200-day average, and you can see a divergence here of all 5 averages, that being the 10, 20, 50, 100, and 200-day averages. Now you notice as we had some consolidation today in this area, we passed back above that 100-day moving average. Also, if you take a look at where our 200-day average is over here, it is quite a ways lower than it was over here. So that's indicating that we might have resistance coming up, and as our price increases, that 200-day average will probably line up right with the 63 cent area. So there's a pretty decent chance that we continue pushing up to about 60 cents and then 63 cents, but we could get denied there at 63 cents. We could actually get denied at 60 cents as well. It is a potential double top from the test yesterday, so we're going to need some pretty strong pressure to break that. And even if we do, there's going to be some really tough resistance at 63 cents. Now, on the chance that we do break 63 cents, there isn't much resistance all the way up back to that 76 cent range that we were trading at before. So without that resistance, we might actually just fly and break out all the way from 63 to about 76, give or take. So Gevo is one to watch as always. I know you guys are very much into this stock, and I enjoy it too. It's a penny stock with really good volume, so you can't really complain about it being a penny stock in that case. And let's take a look lastly at the relative strength index down there at the bottom. So where did we go oversold? Here, over here. Not quite there because slow average didn't line up yet. So the next area would be over here and then over here. So you see we went oversold originally on that red candle, had a lower oversold point. Now we have a higher oversold point and an equal oversold point. Now it is hard to notice, but this area is definitely lower than this area. Not by much, but it is. So we're uptrending and consolidating. And that is a good sign of a potential uptrend. Obviously, if you just spike up and up, then there's a chance you drop and drop. But if you spike up, consolidate, spike up, consolidate, spike up, consolidate, that's much more healthy, and you're much more likely to continue pushing up and finding support, which is what we see so far with Gevo. So let's keep an eye on it for Friday. And depending on what it does Friday, maybe keep an eye on it next week as well. Most likely keep an eye on it next week as well, because this is definitely, like I said, one stock that we enjoy watching. So I hope you guys enjoyed this video. If you did, please like, subscribe, all that jazz, and stay tuned for more analysis like this one.